Hey everybody, it's Pete. Good morning. Welcome to today's episode of Stocks for Breakfast. We got a lot to talk about today. Actually, we're going to start out with the hottest stock of the last 2 weeks, probably a stock you never heard of. I know it popped up recently, just an absolutely explosive move. We're also going to talk about the hottest sector, actually the hottest industry group by a mile for 2023, and why you should not be trading either one of those groups or stocks today, just because they're way too far from the optimal entry. And there was some bad news actually in that group today. We're going to kind of shift over into a separate group of stocks, two actually, that have really been in nice, slow grinding uptrends for the better part of the last couple of months. And that's what we're going to kind of shift over. We also have a big lesson today on an amazing discovery that I made by accident when I was putting stocks into a fake portfolio just to track them and have them as a part of a trading software that I use to gain a little bit of knowledge about how a larger group of stocks traded together. You're actually going to like that as well. And the phrase that we're going to use around that is called trade more to make more. So I'm going to actually hit you with that today as well. A really big lesson. Probably the biggest part of that lesson is it's going to help you reduce your trading stress by about 90%. I promise you that. There's not even a question about that. So, wow, we got a lot to talk about today. So stick around. I'll be back in just 1 second. Okay, so thank you so much for joining me here today. Actually, I see LJ is here. LJ, we have to hop on a call to get your TradeStation scan set up. I promise you we'll do that. We'll do it on a Zoom call. Okay. So got a lot to talk about today. One of the biggest things is probably the semiconductor stocks have been by a mile the strongest. So I actually want to we're actually going to hop in and take a look at that group. You know what? Actually, let me put it over here. Probably a little bit easier to watch. And we want to hop on over into what we might call the hot sector group. And if we kind of work our way over to this and pull it over here over the last 5 days, you can actually see over here some of the percentage gains. NVIDIA and AMD have obviously been two of the strongest that we've been trading for a while. But there's actually news out today that we want to talk about. And if we kind of work our way down into the newsletter, you can actually see this news on Micron over here. And Micron actually had a monster breakout recently. And let's just hop on over to the charts. Got to keep up with me today. We got a lot of good stuff to talk about today. So Micron, which has been a pretty strong stock recently, actually broke out of the 64 level that you can see that we've been watching for a while. Actually kind of paused over here, giving us the perfect entry right at 64 and kind of rallied into a pretty clean new setup coming into Monday. However, this news is actually a gigantic news. And ironically, one of the reasons that the stock rallied was that they were talking about 2 weeks ago, maybe about a week ago, on the fact that they were actually going to be manufacturing more overseas. So this news kind of like 180 degrees in the opposite direction. So that means that the hottest sector that we've been watching, and if we kind of work our way over here into technology, you can see not only over the last 5 days, let me actually zoom that in a little bit for you so you can see that a little bit better. Not only over the last 5 days, but over the last 21 days, easily outpacing any other group where we've constantly been rotating into those ideas. One thing I do want to hit you with over here, this is the last 4 weeks of sector rotation in the market. And if you're not familiar with the way that we do things and the New York method, and specifically how I ran my prop trading firm in New York City, we stay away from predicting. I don't want anything to do with predicting. Everything that we do is simply, where is the smart money allocating their money right now? How long has the smart money been allocating that right now? And then we kind of look for the optimal entry and that kind of stuff. And then we shift over into profit maximizer mode when we have good trades. The last 4 weeks in the market has been super stock specific and even drilling it down even a little bit more industry specific. Now, here's the thing, and this is a big thing that we talk about on our coaching sessions. Did you catch it? That's the big question right now. We're actually going to go over Datadog, one of the bigger stocks that we've been trading recently. And I think we've been mentioning it pretty much every day for the last 3 weeks. It had 12 consecutive daily green candlesticks, and it had roughly a 47% rally in 12 days. That's pretty astounding. Now, the question, first, it's awesome, right? But did you catch it? Did you catch any of it? Did you even catch half of it? The question you have to ask yourself is why not if you didn't? And that really comes down to two things. Number one is having a structure for price action. price action, volume, tape reading, order flow. It all comes down to the same thing. Are you aware of which stocks have persistent with volume buying pressure or selling pressure that you can take advantage of? Again, track, stack, and piggyback on those smart money footprints. That's the easiest way to do it. If you missed it, that simply means either one, you don't have an edge for identifying those stocks. And number two, which is probably even more important, I have to be honest with you, is even if you have an edge, is your software, your trading platform set up properly to tell you, yes, those ideas are here right now. Let's take advantage of them. Because having a knowledge of what you're looking for, and then having your software say, bam, all of these stocks meet that criteria, then trading is actually kind of pretty easy, because then the last part of what you need to go over is simply, are those ideas at or near an optimal entry? And an optimal entry is, I use optimal entry because we get a lot of questions about this. Why optimal entry? There's a very common phrase in the stock market, which is called overbought and oversold. And I understand overbought and oversold, and I'm sure you do as well. But that doesn't help us time new entries. Overbought and oversold simply tells us it's way too far, right? But we kind of twisted that, and we kind of reverse engineered, what does that mean for a trade? How do we know if we are buying at the moment that has the greatest reward potential? So there's great ideas. Is that idea still valid? And then are we at or near an optimal entry? So instead of saying overbought or oversold, we say optimal entry, which now kind of flips it on our side. If we buy this stock right now, how much room is likely to be my profitable trade? In other words, if it normally moves a certain amount, if I hit that button right now, how much of that normal move is still available? And this applies to both day trading and swing trading. There's two different ways of doing it, but you need to know optimal entry, which is kind of take me over into the one stock that has been just absolutely amazing over the last 2 weeks, but I'm not looking to buy it today. And I'm going to show you why. And we're actually going to map out two different spots for that. Oh, by the way, this is a really big day for us in our company today. We've been running our stock trading boot camp for the last 3 years. We've had thousands of people go through our training over the last 3 years. Today, May 22nd, 2023 is our final ever stock trading, 14-day stock trading boot camp. If you want my complete strategy, lifetime access to the course, and you want to trade with me for the next 2 weeks, have coaching sessions with me, everything, click the link below the video, because this goes away today. Today is the last time you can ever get into a 14-day boot camp with me. It's only $295, and you get everything plus lifetime access to that course. So if you want the details on what I actually do, make sure you click below there. I'll actually show you quickly what it looks like. So when you click on over to that page, this is actually what you're going to see. So you can actually see there's not that much time. Watch this video, because this video actually tells you in a lot more detail of everything that's going on down here. And this is actually really kind of like the secret sauce behind what we do. I owned a trading firm in New York City. We had 25 former New York Stock Exchange specialists in my floor after they went to electronic trading on the floor of the New York Stock Exchange. Scroll down, click this link, and hop on over there. You'll be glad you did. So the one stock that I want to talk about today is this stock, Datadog. Now, again, if you haven't traded this stock, I have to ask you why. Once it broke out of this trading range, even if you didn't catch it from earnings, which, by the way, let's actually talk about that for a second. As much as the market, the bigger picture of the market feels kind of like it's still going sideways for the better part of the year, even though the QQQ hit new 52-week highs last week, which is just amazing, you still need to be on top of the individual stocks, which means that you need to put in that little bit of extra time to say, what did the market do recently? What did it do yesterday? And which stocks make sense for me to watch this week? Okay. Now, if you're not day trading, don't worry about it. That's why we're very specific to say this week. It's very, very important. Now, Datadog has probably been the type of trading opportunity that we've been talking about in our community virtually every day for 2023, obviously, especially during a specific time period, which is earnings season. As the market continues to go sideways, earnings plays, earnings catalysts, for lack of a better way of putting it, have by a mile been the easiest, best trades that we've had on our table, day trading or swing trading. We're getting fantastic follow through on the day trading side of things. However, just like this right now, this stock right here, 12 consecutive green daily candlesticks, higher highs, higher lows, closing near the highs. And actually, you know what, let me actually pop that in here right now as well. If we take it from the day before earnings and go up to where it traded on Friday, that was a 47.74% move in 12 days. In 12 days, a fantastic, fantastic move. Now, if you didn't catch this, I'm not saying this to make you feel bad. I'm saying this to challenge yourself, which is the whole point of what coaching is all about. Ask yourself why. Ask yourself why you did not catch this move, because then you're getting feedback from the market, and more specifically, feedback from your own results, that maybe something's missing and maybe there's a little tweak that you need to make. Maybe put it on a post-it pad, put it on your monitor and say, do this a little more often. And again, there's only two things. Let's be super clear about this. Knowing what to look for and then having your software set up to tell you what you're looking for is there right now, which kind of brings me into this week. We're going to get into some ideas, but the big thing I want to talk about for this week, and let's actually pull up a chart of probably some of the stronger stocks, right? This is actually a really clean 2-week run. Now, obviously, semiconductor stocks, as we just talked about before, just an absolutely on fire move, and quite frankly, across the board. So we actually kind of break this down even a little bit more and hop on over specifically into those semiconductor stocks. And we take a look at some of the maps. You can actually see that look, these are the kinds of moves that we've been having over the last couple of weeks, where it's been very, very broad-based. Broadcom just kind of popping in there as well. AMD, probably the strongest move. AMD and NVIDIA, probably the top two. But here's the thing we need to talk about right now. We're about to hop into the bigger list of stocks that I'm going to be watching this week, and absolutely in my game plan for the community this week. The prior 2 weeks, absolutely amazing price action and volume. We were getting well-bid candlesticks, higher highs, higher lows. We were getting energy candlesticks closing near the high. Also good volume on those moves. Also light volume pauses leading to the next move. Absolutely amazing. Now, this week, the market's setting up a little bit differently. We have these big moves to the upside that are way beyond the optimal entry. So now we're kind of getting back into, is it a good trading idea? There's a separation between pick a side, then pick a spot. It's not that hard to pick a side right now. Again, provided that you have an edge and you know it's there, right? Picking a spot right now is going to be a little more challenging this week. And we're going to go back into that Datadog chart because I want to show you, give you some ideas of how to come up with the next logical spot where accepting the risk on the trade is justified because the profit is likely. And there's enough profit that's likely. So raise your hand if you've ever got into a trade where as soon as you bought that thing, you're like, man, this was fantastic. Goes in your favor one day and then pulls back the next 4 days. You get stopped out of the damn thing, and then it does exactly what you thought, right? I'm going to show you actually probably a beautiful visual of that, which is obviously AMD, right? We had this big move up. You get involved on this breakout, pulls back $7, stops you out, and then does this over the next week, right? That simply means that you need to refine the difference between pick a side and pick a spot. A lot of traders, too many smart traders, get involved too late because they don't recognize the optimal entry compared to what the stock normally does. So get overbought and oversold out of your head because it's kind of a nebulous thing. And quite frankly, overbought can remain overbought for a while. We want to bring overbought back into the actual trading aspect of it. And what is the next good entry? Good entry means if I buy it right now, there's enough profit potential that's likely for the risk, which now takes us to the last 2 weeks and heading into this week. The last 2 weeks were amazing. We had some fantastic, absolutely fantastic optimal entries and follow through. But now that average true move on a lot of those swing trades has been used up. So if you can get a visualization of if a stock normally moves $15 and it already went 14, that's really going to be tough to justify a new swing trade. So what we need to see is we need the optimal entry to reset for us to put on another new trade. Now, we got news today about Micron. We got news today about Meta. So a lot of the bearish news that a lot of these stocks that have just been kind of like grinding and some of them even screaming higher to the upside are most likely going to pull back this week. Now, here's the biggest thing that I want to get across to you, and I really hope you get this point. Knowing what to look at Having the system is good. But having a system and understanding chart patterns is different than trading. Trading is what happens between entry and exit. Trading is what happens when you're managing position size, the right position size. There's a big difference between I know what to look at and I know how to make money. And I hope you put that on a post-it pad because it's a really significant difference. We get a lot of people that come into our community and say, I knew exactly what to look at, but I couldn't make a dime, or worse, their trading account was going backwards. There's a difference between having a chart set up and actually understanding when to have bigger size, when to pull back on your position size, when to book quicker profits, and when to be adding, how to use market internals, all of those kinds of things. And you know what? I'm actually going to take even a step further back here. Let me actually show you the questions that are kind of required actually on my coaching call. So I'm actually going to take you to a little bit of a deep dive here on that as well. So you can see we actually have our coaching sessions tonight, actually. And these are the questions. So when you're thinking about what you can actually do to produce some of the gains in the market, obviously you got to go through this list. What is your edge? How do you scan for your edge? Trading your edge with real money, entry setups, entering at the optimal entry, how to not buy too late, which actually is the big lesson I want to talk about today. Position size, reading the market, reading sector rotation, how secondary indicators like the market internals affect decisions. So you get the idea here, right? I'll actually post this for you on what I'm about to show you on the newsletter. Now, why is this important and how does that translate into this week? There's a very big thing that we do, order flow and tape reading. Order flow is how long has smart money been allocating money to a particular idea. And that's a part of what we call order flow stacking. Order flow stacking is thinking through the charts and saying it's more than just an ascending wedge, like all of those fancy kind of patterns, right? We actually train everybody to think that there's real money being allocated. How long has that money been allocated and how long can we have that conviction, right? But the second part is the part that a lot of people miss, which is going to be really affecting this week of trading, which is it still valid in that time period that I'm looking to trade? So in the universe that we're mostly talking about right now, which is a swing trade, which would be, kind of like over the next, let's say 3 to 10 days, depending on how fast that stock moves in that direction. We can look at a lot of stocks this week, specifically semiconductor stocks, which are really obvious, but they're probably not going to be valid swing trades this week. This week's order flow will most likely be bearish because of profit taking, because of news that we just saw on Micron pulling back that whole sector. So no matter what, we're not even looking for an entry. But here's kind of where it really gets into the next level of actually making money and seeing your trading account grow with, quite frankly, predictability when you learn the skill. And let's be clear about this. Trading is a skill. And that's actually pretty exciting. For some people like, oh God, I got to learn it. Yeah. But if you learn it, you then will have that skill for the rest of your life. And that's where you kind of all that stress in your life just kind of decompresses because you're in charge of making money and trying to make your account grow from 1 week to the next, 1 month to the next, right? But this is where it becomes significant. You're going to look at a lot of stocks and a lot of headlines this week about how strong semiconductor stocks have been, how strong Google has been, how strong Amazon has been, kind of venturing off into a couple of other sectors. This week, there's a really good chance those stocks are going to pull back. They've been on fire. There's a little bit of negative news, Meta in that sector. We also have negative news on semiconductor stocks, which means now that those stocks now need to go into our tracking journal until we find a new optimal entry, which means now we just got to work a little bit extra, another 10 minutes at night and find ideas that are now near the optimal entry, setting up the new trade. If you're really advanced, maybe even if the market pulls back this week, got a lot going on, right? The debt ceiling is a huge conversation right now. If the market pulls back a little bit this week, do you understand short selling? Maybe you might look to either straight up short sell some stocks this week if the market's going down. Etsy is one of those stocks I'm looking at this week on a move to the downside. If that ends up being the case, you can hedge against any long. So in other words, you might have some opportunities that you want to hold and short sell or buy puts on some of these stocks that you would think are going down if you understand that side of the equation. If you don't understand hedging or you don't want to do that, maybe you don't even have an options account, that's the second part of the trade, which is it right to be holding these ideas when they've been producing these 40, 50% moves in a very short period of time. So remember, everything we do is what's likely to happen next. Likely to happen next means if I hold this or buy this now, is that the best place to allocate my money? Or is there someplace else that I could put my money where it'll catch the next move, the next optimal entry, the next optimal entry? And that's what our job is. Our job as money managers, which you are, if you're on this call right now or you're watching this video, you are a money manager. You're managing your own money. So the question now is, how qualified are you to believe when you wake up every single day that you expect to make money, that you'll understand what the optimal entry is, that you understand order flow and whether or not it's still valid? That's what we're going to talk about here today. And again, if you want my whole system, click that link below and make sure you join me. The boot camp starts today. And actually, I just talked before about chart setups and platforms and everything. We actually, the very first thing we do in the boot camp, it's actually at noon today. I'm going to actually show everybody how to set up the charts exactly the way I do it in my own trading platform. So we're going to work our way now into ideas based on what's rotating now and the group. But before we do that, I want to hop on over into this list. And you can actually grab this in the description below. You can actually download your own copy. So what you want to do is you want to go over here to File, and you want to either go to Make a Copy, or you want to go to File and Download and pop yourself in there as a PDF. So you can get this entire document right now by clicking down into the description below the video. So obviously we want to talk about sector rotation, right? The one sector to rule them all, which is the sector we just took a look at, which is the semiconductor stocks, right? But again, there's news on Micron today kind of dragging this group down. So now we got a bearish catalyst. We need profit taking up in that area, pulling back a little bit, right? So working our way deeper into sector rotation here, double-digit gains for some of these stocks, just these four. Double-digit gains over the last 5 days. So remember, if we're about to place a trade, what's likely to happen next if I choose to accept risk? That's the big thing. Beautiful charts for 2 weeks, but those companies got hit this weekend by bearish news. So it's once again time to rotate into fresh ideas. So what we're talking about here is sector rotation. So as strong and as beautiful as these stocks are this week, right now, as of this moment, there's a good chance we're going to avoid them this week, or at the very least today, and look for other ideas, okay? Now, additional news from overseas at last week's second hottest sector. So now you see we're taking advantage of obvious order flow. Is it still valid? There's a difference between it's obvious and right now it's a good idea, okay? Google, Meta, Netflix, Spot, and LYV, which I don't know if you've traded this one recently as well. I'll give all the credit to John Bates in our community calling this one out. Actually, again, another earnings play. You can actually see here is where earnings popped, and this has been the move since earnings, right? Another double-digit gain there. Let's continue. All right. So Meta, one of those stocks that have been grinding higher, actually an amazing move. I think it's 176% move or something like that since November when it was down in the 80s. This is a big deal. This is a really big deal. And obviously, now you got to consider whether or not this is something you're going to be wanting to look at today. A record $1.3 billion over EU data in the US. So that's another piece of news you need to know for today. So what's the point of all this, right? All the point of this is teaching you that all these stocks that were on fire for a period of time, way beyond the optimal entry, and now we also have bearish news coming out, all right? So the challenge we have now is one of concentration. As in the majority of the market's advance was supported by this small group of large cap stocks and even to a bigger degree, semiconductor stocks. So the thesis for the coming week is one of leadership. So again, the coming week is the week that we're about to hit heading into Memorial Weekend, right? The only other dominant moves you've seen for the prior 4 weeks are bearish, coming in the form of energy and basic materials. So if we take a look over here, this is the last 4 weeks. All of this yellowish tone, tan, whatever you want to call it, means that over this 5-day period, nothing significant happened. The only thing that was significant we saw was energy and technology over the last 4 weeks. And if we kind of work our way down in here even more, basic materials have been weaker as well. We don't really trade utilities that much. So really over the last 21 days, energy and basic materials are the bearish side of things. So what does that mean? That means for me, again, everything we do is for educational purposes. You got to make your own decisions. I'm hoping I can help you make better decisions. It means these technology stocks and swing trade profits on these technology stocks, I am moving my trailing stop loss up higher, and the sectors that were weaker if selling comes into the market this week, I am shifting over into these areas that already had bearish order flow and what we also would call relative weakness to the market, that if the market goes down, then those stocks would actually be the most likely to have the biggest moves down because they were already weak when the market was strong. Okay, so you see how we're kind of putting the pieces together. This is actually what I do for everybody every day. We're kind of putting the pieces together. What's the market doing? What sectors are doing? What industries? And which stocks are at optimal entries? That's the whole part of the process, right? So if we continue to work our way through today's newsletter, industrials, obviously, industrials, again, if you haven't traded General Electric for the last 8 months, I think we've been kind of pounding the table on this thing for the better part of since October. Really, this bottom pattern right here, and then the subsequent pause after just before earnings, this stock is just, go back to watch all of our videos. GE has been in our list for a while now, but let's take a little bit deeper look into some of the industrial stocks. We actually had Boeing as probably one of the stronger stocks that joined GE last year. It hasn't done anything for 8 weeks. It's actually been kind of stuck in the middle of nowhere, but you can see how powerful is this when you understand sector rotation and have a strategy to put these pieces together. We just showed you General Electric. We're now looking at Boeing and all of this list of stocks, industrial stocks during that period of time. All right. Industrials carried the last 4 months, looks worthy of a new watch list, but here's the stocks that we're watching now. Of course, General Electric, BLDR has now been at all-time highs or at or near all-time highs for the better part of the last few weeks, and Delta Airlines broke out of an 8-week trading range. So not as big of a list, but stocks that are performing well in that particular sector. So going market sector industry stocks, ultimately going to average true move, which will then give us optimal entry. So the other one was UAL, which you can see here finally popped out of this multi-week trading range, kind of going all the way back into the middle of March. So almost about a month and a half now. And you can see it's got reasonable room to go up to this 54 level. That would be the next level I'm looking at up over here. Consumer cyclical, nice gains on the back of Amazon and Tesla, but that was very short term. Amazon has resistance only a few dollars above, and Tesla only a few days of bullish order flow. So what this is implying here, I'm going to highlight that for you so when you download it, you'll have it. Only a few days of bullish order flow means there is not stacked order flow. As a matter of fact, last earnings report for Tesla was not awesome. Last week, it happened to rally with the rest of the market when the market took off. And if we take a look at Amazon, again, which has been in our list pretty much every day, you can actually see that there is some selling pressure over here, not that far above. So what does that mean? Again, talking about pick a side, pick a spot. If Amazon has been strong for a couple of weeks, but now it's coming up to an area where the last time the stock got to this price, sellers held the offer, that's the trading floor terminology, and pushed it down from 120 down into 80. So now Amazon, although it's bullish, it's coming up to an area where it's used up a lot of its average true move or its profit potential. So even though Amazon looks good, it's a better trade for me over 120, where then beyond 120, we could be looking at possibly move up to 148. So again, now these are the conversations every day that we have in the community, and every day in the game plan is where should we be allocating money now? We constantly want to put our money to work, constantly want to put it to work. And that means order flow, tape reading, optimal entry. After the optimal entry, then we shift over into what we call the profit maximizer, which is two different ways of managing profitable trades. One of them in a momentum type market, which we've kind of been in recently, or a trending type market or a trending type scenario like we've had in semiconductor stocks. So again, understanding how and when to use a certain type of trailing stop loss is a very important part of trading. Again, raise your hand if you've ever held a profitable trade too long and it pulled back. That's just because you didn't recognize the market conditions, that was all that was available at that moment. Or have you got out of a good trade too soon and you didn't recognize that was an amazing scenario? Maybe the market, the sector, the group, and that individual stock had great price action, and you should have not only held that stock, but even looked for a spot to add to that trade. All right. So these are the kind of little things that go into the difference between I know charts, I know every chart pattern in the world, versus you actually understand the steps to managing trades, both winning trades and losing trades. That's actually a big part of it too, is keeping those losses small, if not staying in cash. What I believe, the way the market's unfolding this week, based on how I look at things, I think that the market's going to kind of probably go sideways a little bit this week, if not pull back a little bit, which means that we need to go up the power pyramid a little bit more. And I'm going to show you what that looks like. Up the power pyramid to find stock specific ideas this week. And you have a bunch of those in this list as well. So I just want to point you in the direction of what that looks like. So when you download this, you want to go all the way down here to Legend and scroll down over here. So when the market is amazing, you got all these beautiful stock, the whole picture is all doing the same thing, right? If you could visualize money going in and out of the market, all the money's on the same page. Lately, we've been very sector specific. We just talked about industrials. We talked about technology. We talked about consumer cyclical. We talked about communication services and Meta and Google, right? This week, I think we're going to be a little bit more stock specific. The odds of us kind of chopping around a little bit this week, especially with all of the news that's happening this week, the debt ceiling is going to be a really big conversation this week. Probably going to be a little bit more stock picking this week than broad based in the game planning. All right. So again, some of the ideas that we have on the table this week: restaurant stocks looking pretty darn good, and as we talked about before, home builder stocks. Now, what's kind of funny is home builder stocks. You wouldn't think that the way that interest rates are higher right now, that home builder stocks would be going up. But this is the difference again. Make your own decisions. Don't read the headlines. Make your own decisions. If you were reading interest rates, home builders, everything's crashing, all of these stocks in the home builder sector, DHI, Toll Brothers, Pulte, KB Homes, all of them have been slowly grinding higher for the better part of the last several months. So again, you got to ask yourself, why are you missing them? It just means that you might not need to turn things upside down. Maybe it's just a little bit of a tweak that you need to make, but hopefully you have that little bit of dissatisfaction in yourself where you're saying to yourself, you know what? I should have caught that. Why didn't? Instead of being angry that you missed it, ask yourself why, and then challenge yourself to go and figure it out. If you want my help, absolutely click down and let me know. I'd love to see you in the community with us today. So anyway, in the description below this video, you can download this entire newsletter for today and all the stocks and the way I'm looking at things this week. There's also a lesson in there about trading smaller position sizes and more position sizes. And I actually give you an example of why I think that's a smarter way to trade, especially if you're learning how to trade and you're looking for feedback from the market. On top of, it'll put you in a position where you always have less shares on trades that don't work out and more shares on trades that do. It's kind of the recipe is perfect for understanding how to trade, not getting hurt if trades don't work out, and making a few bucks when it actually does. And you kind of add to that education with every decision that you make. So there's a nice lesson in there as well. And again, if you're not sure what I'm talking about, you're just going to click over here on the market part of it, and you can actually see here. Okay. So anyway, I really think that the last couple of weeks have been amazing, but I do think that this week is going to be a little bit more back and forth, especially with the 3-day holiday coming up here. I believe in Canada is today's actual holiday. So we got trading going on here today. So thank you so much for joining me for today's episode of Stocks for Breakfast. Remember, today's our last boot camp starts ever. If you want to trade with me and get my whole strategy, make sure you click down in the description and make sure you download the copy of this week's Daily Ticker newsletter so you can get an idea of what we're watching for this week as well. All right, go get them. Have an awesome day, and I'll speak to you soon. Thank you.